Ever feel like your bank is treating you like a lemon, squeezing you for all you're worth? Well, you're not alone. Banks, with their polished marble floors and shiny glass doors, often carry an air of respectability and trust. But behind those doors, many of us find a maze of high interest rates, strict eligibility criteria, and lengthy approval processes. It's like a never-ending game of snakes and ladders, where the snakes are just far too many, and the ladders, well, they're elusive. And it's not just about the money. It's about the time, the stress, the hoops we're made to jump through. It's about feeling like a small fish in a big, profit-hungry pond. But fear not, my financially savvy friends, for there are alternatives that can save you from the banking squeeze. So, sit back, relax, and let's venture into the world of alternative lending. It's your money, your time, your peace of mind at stake. Let's make it count. First up on our list of bank alternatives, we present to you credit unions. Now you might be wondering, what's a credit union? Well, think of it as your friendly neighborhood Spider-Man, but for your finances. Credit unions are member-owned, not-for-profit financial cooperatives that provide savings, credit, and other financial services to their members. They're like banks, but with a twist. In a credit union, you're not just a customer, you're a member. This means you have a say in how things are run. You're not just a faceless account number, you're a valued part of the union. So how do they operate? Credit unions pool their members' savings deposits and shares to finance their own loan portfolios, rather than rely on outside capital. Members pool their funds to make loans to one another. The volunteer board that runs each credit union is elected by the members. But what's the catch? Well, the good news is, there isn't one. In fact, borrowing from a credit union comes with a host of benefits. For starters, credit unions generally provide better customer service than banks. They are smaller, more localized, and because you're a member and not just a customer, the service is more personalized. Secondly, because they're not-for-profit entities, the earnings made by credit unions are returned back to members in the form of reduced fees, higher savings rates, and lower loan rates. So, you can say goodbye to those exorbitant interest rates that traditional banks often slap on. Finally, credit unions often have more flexible loan terms than banks and are more willing to work with you if you have less than perfect credit. So if you're tired of being a faceless account number, a credit union might just be the friendly face you need. They offer a refreshing alternative to traditional banking, with a focus on member benefits rather than profits. And in a world where every penny counts, that's a friendly face indeed. Next up, let's dive into the world of peer-to-peer lending, where it's not just about money, it's about community. Imagine a marketplace, but instead of buying apples, you're buying into someone's dreams. That's the essence of peer-to-peer, or P2P lending. It's a system where individuals, not banks, lend money to other individuals. You're not just a faceless account number in this scenario, you're a person helping another person. Quite a refreshing change, isn't it? Now let's get into the nitty-gritty of how it works. In a P2P platform, people looking to borrow money create a profile and a loan listing, much like an online dating profile, but for money. Potential lenders can then review these listings, get to know the borrowers and their needs, and decide if they'd like to extend a loan offer. It's a bit like online shopping, but instead of adding a pair of shoes to your cart, you're adding a slice of someone's financial future. But what's in it for you, the lender? Well, besides the warm, fuzzy feeling of helping someone out, P2P lending can offer potentially lower rates than traditional banks. The process is often simpler and faster, with fewer hoops to jump through. It's a win-win situation. Borrowers get access to funds they need, and lenders earn interest on their money. And let's not forget the satisfaction of supporting individuals rather than institutions. In a world where big banks and corporations often dominate the conversation, P2P lending gives power back to the people. It's a small but significant way of saying, "Hey, I believe in you and your dreams." So, if you're looking for a loan, why not bypass the bank and head straight to the people? Or if you've got a little money to spare, why not invest it in someone's future? You might just find it's a more rewarding experience than you'd expect. With peer-to-peer lending, you might find that many hands don't just make light work, they can also make cheap loans. Moving on to the digital mavericks of the lending world, online lending platforms. Now, what are these online lending platforms, you might ask? Picture a virtual marketplace where borrowers and lenders meet. No bank in sight. It's like a financial speed dating service, but you're looking for loans, not love. Online lending platforms are digital intermediaries that connect borrowers with lenders, bypassing traditional banking institutions. They're the tech rebels disrupting the lending industry. So how do they operate? It's as easy as pie. You simply log onto their website or app, fill out a loan application, and voila. The platform then uses complex algorithms, no, not the dance type, to assess your creditworthiness. This goes beyond your credit score and may include factors like your education, employment history, or even your social media presence. What's the catch? Well, there isn't one. Online lending platforms offer several enticing benefits, making them an attractive alternative to conventional banks. Speedy approval times are a big draw. Forget waiting days or even weeks for a loan decision. With online platforms, you can get approval within a matter of minutes. Yes, minutes. And let's talk about rates. Online lending platforms can offer competitive rates, often better than your traditional bank. How do they do it? By operating primarily online, they cut overhead costs, and those savings are passed on to you, the borrower. But perhaps the most appealing benefit of these platforms is the convenience. You can apply for a loan from the comfort of your home, in your pajamas, with a cup of coffee in hand. No need to make an appointment. No need to wait in line. No need to even leave your house. It's lending made easy, and there you have it. The digital mavericks of the lending world are changing the game, offering faster, easier, and more competitive lending options. So if you're a tech-savvy borrower, online lending platforms might just be your click to riches. Last but not least, let's explore the world of microfinance, where small loans can make a big difference. But first, what exactly is microfinance? It's a financial service that offers small loans, also known as microloans, to individuals who might not have access to traditional banking services. These are often entrepreneurs in developing countries, eager to start or expand their small businesses, but lacking the necessary capital. Let's delve a bit deeper. How does microfinance work? It's quite simple, really. Microfinance institutions collect funds from investors like you and me, who are then pooled together to create a loan for a borrower. The borrower then repays the loan over time with interest, which is then returned to the investors. Now, you might be wondering, what's in it for me? Well, apart from the potential for high returns, there's something even more valuable at stake: the chance to make a significant impact. Your investment could be the catalyst for someone to lift themselves out of poverty, to provide for their family, to contribute to their community, and to stimulate their local economy. It's quite remarkable to think that such a small loan could have such a large impact, isn't it? But there's more. Microfinance is not just about providing loans. It's also about providing a range of financial services such as savings accounts, insurance, and financial education. These services help borrowers manage their finances effectively, reduce their vulnerability to financial shocks, and ultimately lead a more financially secure life. So the next time you're considering where to invest your money, why not consider microfinance? It's not just about the potential for high returns, it's about making a real difference. With microfinance, you're not just borrowing money, you're becoming part of a global mission to alleviate poverty. So, there you have it, folks. A world of borrowing beyond the bank. We've journeyed through the realm of friendly neighborhood moneylenders, marveled at the power of the crowd, and surfed the digital wave with mavericks of the online lending world. We've seen the impact of small loans and how they can make a big splash in one's financial stability. All of these alternatives offer unique benefits, and there's no one-size-fits-all solution. Whether you're a small business owner seeking to expand, a student trying to fund your education, or a homeowner looking to renovate, there's a lending option out there that fits your needs like a glove. But don't just take our word for it. Do your own research, weigh your options, and make an informed decision. After all, it's your money, your choice. Remember, your money is your power. Use it wisely. And if you enjoyed this video, don't forget to like, share, and subscribe for more financial wisdom. Until next time, Keep your coins clinking and your dollars dazzling.